let's welcome on board Dilip Bhatt as well and find out what he's making of the market. Dilip, hi, good afternoon. Good to have you on the show. We've moved up quite nicely. We were just a whisker away, really, 2% from that all-time peak, and then so much tariff uncertainty. And now you've got the earnings as well coming up. Where do you think the market is headed next?
Sure, I think market is still begging for a direction. I think the screen on the markets are clearly telling that they want to move ahead without any doubt. But I think somewhere the fundamentals will have to support them very strongly. This is what we feel, which is not what it is at the moment. So I think this quarterly results also may be a mixed bag because, the tariffs have still not been spelled out so far. And there may be some front loading in a few sectors. So that's why you'll find that the performance may be good. And in a few others, it may be lagging. More important, I think, what is the management commentary going to be? That also is going to be very important. So I think my own sense is that markets driven by liquidity will continue to try to move ahead. But at the same time, the joker in the pack certainly are the FIIs, how they will behave, whether they are going to give a consistent support. If not, my own sense is that markets at best will spend some time sideways consolidating. I don't think that we can just, there will be any big correction. That's what I think. So I will wait for the markets to give direction once the fundamentals are very clear. But clearly, the valuations are very expensive.
All right, so the valuations are expensive for the markets right now. Hi, Dilip, but help us with your take on FMCG pack because that's the clear star performer today. And yes, of course, the move is definitely backed by the good Q1 updates as well. But do you like the sector at this point in time? Because now that the defensives are making a comeback, what is your sense on the FMCG pack and are the valuations justified at this point in time?
So two things. I think one is that valuations certainly are not cheap, but they were never cheap. But I think some of the factors that is really going to provide a good tailwind is, as what I also went through the pre-Q1 report of quite a few of them. So I think the volume growth is emerging. And more importantly, I think both the rural areas as well as the urban areas possibly will start showing a volume growth. So that is going to be a huge change from the past because the volume growth had been very muted in most of the FMCG companies. And with inflation, I think cooling off quite a bit, I think that also will help them to, shore up their EBITDA because not all of them are going to take a price cut. So all said and done, I think over the next 2 to 3 quarters, we should see the momentum in FMCG stocks building up because they had been lying low for quite some time. And possibly there will be some tailwind in their favor. So I think the FMCG stocks look good for a momentum and for possibly a short-term upward movement.
Okay, so that's the take on FMCG. Kunal, coming to you, today pharma looks interesting because after 11 sessions of buying, we've seen pharma in the red now finally. Do you believe you're spotting any opportunities here in Nifty Pharma now?
Yeah, I think there are a few names. So, it started off with, I think, Aurobindo Pharma seeing a short covering, Glenmark Pharma seeing a very good recovery in the last, I think this is the third or the fourth consecutive week for Glenmark Pharma, where the stock has recovered from, I think, 1500, 1550 mark to now 1850 plus levels where it's trading right now. So over the last, I think, 2-3 weeks, there has been, fewer traces where individual pharma stocks were looking attractive. But now I think, what we've also seen that some volume action kicking back again to the larger cap names on the pharma side, that's Sun Pharma. So that I think could be a precursor or an indicator that we could be looking at, resumption of uptrend for many of the individual pharma stocks. I would look at, few names over here. For example, I think at current levels also, Glenmark Pharma is something which looks attractive. The stock has been a lot more consistent in the last, 2-3 weeks of this price uptrend. So I think keeping 1800 thereabouts as a trailing stop loss, traders could look at a hold or buy on Glenmark Pharma. Further from current levels, I would look at 1900 to 1950 as a potential target range. Biocon is something which has started to spring back into a breakout mode, about 370, 375 levels. That's also something which looks attractive. So my sense is that the stock should be good for at least another 20 points on the upside, 390 thereabouts with the very short term. Sun Pharma could be a potential contra bet at current levels. The stock is yet to show signs of a major price turnaround, but on the volumes and the way the price activity has happened today, I would believe that Sun Pharma over the next few days could also see a mild bit of a breakout on the upside.
Kunal, I just want to get back to the sector that we were discussing, FMCG. The fact that most quarterly updates are coming in positive. For Dabur, it was in line, but even Dabur is jumping up today. Do you sense a trend revival here? Because FMCG as a sector has been suppressed for many months now.
Yeah, and that's exactly what's happening. So it started off with, I think, Nestle and few other names which start to look attractive. Today morning, Godrej Consumers was up some 5-6%. That stock saw a follow-through up move. HUL started off with, I think, a couple of percentage points higher, and that stock has crossed 2400 levels. It's now on the verge of breaking the 200 DMA. And then you have other names like, for example, Marico saw a mild bit of an uptake. The stock saw a revival from its 50-day moving average a couple of days back. Colgate, I think, is the other stock which is also seeing a good revival from its minor swing lows. So what we are seeing right now is that the move which started off for few odd stocks is now getting into more of a volume aggressive move for many of the FMCG names. So what's happening could be that maybe the risk reward starts to look now very attractive into the FMCG pocket, and with some confidence building out into a few larger cap names on the FMCG pack, I think the money would start to flow back again into the slight underperforming names, and I think that's where one could find more trading opportunities. I would still believe that many of the FMCG stocks from here on, Nestle, HUL, etc., they could see a decent upside of at least another 3 to 5% over the very short term.
All right, so that's the take coming in on the FMCG pack. We got you the both fundamental as well as technical take. But one of the other counters that is under immense pressure today, that is Naukri, Info Edge. The company did come out with its update, where in the Q1, the standalone business is expected to see a drop of 35% on a sequential basis on the top line. So that's the reason where we are seeing that Info Edge is almost down 4% right now, when the recruitment solutions is expected to post a revenue of 470 odd crores, 99 acres. There too a drop is expected, and others expected at 79 crores. But Kunal, give us your sense on how do you see Info Edge on the charts, and what do you make out of this 3.5% drop?
I think it's a concern for Info Edge or Naukri, because the stock over the last 2-3 months was just about going through a sideways patch. I was actually looking at the last 2-3 months of range for Info Edge. The stock was stuck into a band of 1400 to 1550 thereabouts, and now the stock is now trying to challenge back again this 1400 level. Now what happens is initially there is a wave where the stocks consolidate, and there is an expectation that the stocks would break out on the upside, but when they are met with a very sharper degree of price correction, and that too on the higher volume side, we generally expect that the stocks eventually go into a turnaround in a breakdown mode. So I believe after today's price correction for Info Edge, the stock coming very close to that 1400 critical short-term support mark, eventually the supports should break for the stock over the near term. So I think for someone who's looking to buy the stock, you may probably wait out for some more time. I would expect 1350, 1320 as a good point where traders could look at a contrabuy on Info Edge.
Okay, so that's the take on Info Edge. Dilip, want to come to you to get your sense on the entire telecom space. Seeing some deep pressure building in on Indus Tower and Bharti Hexacom, two of the stocks that ICICI Securities has today gone ahead and downgraded and also revised their target price. What are you making of the entire telecom space in light of everything that we've recently seen with Vodafone? Which stock do you believe is best placed here?
So I think, when the telecom stocks have really done pretty well in the last 6 months to 9 months. I think Vodafone, of course, has its own reasons for whatever is happening out over there. And there is no clarity on that particular portion, because some event or corporate event that is likely, which is what the market is pregnant with possibilities. So I think as far as telecom is concerned, I would say that it has had very good run, especially led by Bharti Telecom. And from here on, whether I would be looking forward for some further movement, I'm not sure. I think telecom I would play, if at all, more by way of a defensive sector from here, not for any proactive reasons. I would just wait and watch for a while before I look at this entire sector again. Not in a hurry to commit in this particular sector, Because one thing is sure, the capital intensity of the business continues to remain pretty high, and things are very dynamic out over there. So not really in a hurry to commit to this sector at the moment.